So as we know, the budget drops on the 26th of November, but the rumours are already out of control. Income tax rises, thresholds frozen again, pensions under attack, ISA's being redesigned. They're telling you everything is on the table. If you're a business owner, director, investor, this isn't just about rates, it's about your structure, your timing, what you keep when the tide turns. I'm Sarah from Tax for Pros, and today we're breaking down the top threats we're watching for this week and what you can do right now to protect your profits, your plans, and your future. Here's what's pushing this budget into territory most of us haven't even seen in years. The official forecasting body just downgraded UK productivity sharply. We're talking a 20 billion hole in the books. When that happens, the Chancellor has two choices: cut spending or raise revenue. And the signs point to the latter. So forget subtle tweaks. We're in the realm of sweeping structural change. And if your business isn't prepared, you'll be the one paying for someone else's problem. Let's get into the rumours, and let's be honest, at this point, they're not whispers, they're practically press briefings. Number one is income tax rises and threshold freezes. The personal allowance is 12,500 and the higher rate threshold is 50,000. They've been frozen since 2021. That freeze was meant to end, but the Treasury insiders are saying it's been extended again to 2028 or beyond. Inflation means your income rises, but the thresholds don't. So more of what you earn slips into the higher bands without anyone technically raising a tax. And now the big rumour: the top rate may rise from 45 to 47% or even 48% temporarily. Once it's up, it'll stay there. Number two is the 2p switch. The idea is to cut national insurance by 2p while increasing income tax by 2p. It sounds neutral, but it's not. PAYE employees might feel a small win while limited company directors lose out, because we already keep NI law through salary dividend structures. This shift drags more of your income into the fully taxed net. Number three, dividend tax and corporation tax tweaks. The £500 dividend allowance could disappear completely, meaning every pound of dividends becomes taxable. There's also talk of removing the small profits rate band and flattening corporation tax back to 25% across the board. That hits smaller companies hardest, especially those hovering just under 50k. Number four, capital gains tax alignment. Expect talk of aligning CGT with income tax rates in the name of fairness. Right now, selling a business or investment attracts 10 to 20% CGT. If they align it, that jumps to 40% overnight. If you're planning to sell shares, dispose of property, or extract retained profits, get professional advice now. Number five, pensions are under attack. Higher rate relief could be scrapped for a flat 25% credit. Salary sacrifice may lose its edge, and there's even talk of taxing growth inside large SIPs to curb excessive wealth. In plain English, the government wants that long-term money in circulation, not locked away. Number six is ISA reforms and wealth tracking. The Treasury wants to merge cash, stocks and innovative ISAs into one unified ISA. It's sold as simplification, but it gives HMRC full visibility of your balances and gains. They're also floating a cap on annual gains for high balance accounts. If that lands, the era of truly tax-free compounding inside ISAs ends. Number seven, property and CGT on homes. Expect a hit on investment property. Higher CGT, stricter private residence relief and new stamp duty tiers for second homes. Anyone with property in personal names is in the crosshairs. Moving those assets into an SPV or holding structure could become a lifesaver. And finally, inheritance and wealth taxes are back in the conversation. Business property relief, agricultural relief, trusts, all under review, which in government speak means get your affairs sorted before April. Altogether, it's not one big tax rise, it's death by 1,000 fiscal cuts. Each one chips away a little more of what you keep until structure becomes the only thing standing between you and overtaxation. So what does all this mean for you? It means this budget isn't just about numbers, it's about strategy. We're moving into a climate where higher taxes and tighter reliefs are standard, and the people who'll come out ahead are the ones who plan, not panic. You don't need to rush anything before the 26th. What matters is being organised so you can act fast and confidently once we know the final rules. Step 1, get your foundations right. That's exactly what our tax game plan is built for. It walks you through how to pay yourself efficiently, extract profit, and use every legitimate deduction. We'll update the tax game plan after every major budget or policy change, so it's always accurate, always current, and always ready for you to rely on. So don't treat it like a one-off download, treat it like your personal tax Bible that evolves with the system. Step 2, reassess your pension strategy. Pension reliefs are clearly in the crosshairs. Instead of rushing extra contributions now, review your limits and carry forward rooms so you're ready to optimize once the new rules land. Step 3, forecast your dividend strategy. Don't preempt changes, just model them. See how your take home shifts if dividend tax rises by a point or two or the allowance disappears. When the announcement hits, you'll already know your options. Step 4, strengthen your structure. Make sure your holding company, trading company and SPVs are tidy and documented. A flexible structure means whatever new rules come, you can pivot without panic. Step 5, get visibility across everything. ISAs, property, pensions, company cash. Gather your figures now. When the budget drops, you and your accountant can react from data, not emotion. The message is simple. Calm preparation beats chaos. The better your structure and visibility are today, the faster you'll adapt, and that's how you stay ahead when the rules keep changing. Now, before anyone rushes off to panic, withdraw dividends or move money around, let's slow down and look at the timing, because none of this flips overnight. Here's how things usually work. Income tax and thresholds. If the Chancellor freezes or raises rates, that normally applies from the start of the next tax year, 6th of April 2026. So even if they extend the freeze, nothing backdates. It just means we're stuck at today's levels for another year. Dividends and corporation tax changes, the same story. Any new rates, thresholds or rules would begin from 6th of April 2026, applying to future profits and distributions. Pensions and salary sacrifice reforms, again, they'd start next April. Contributions made before then are safe under current rules. ISAs. If a unified ISA is introduced, there'll be a consultation period first. We're probably looking at April 27 before anything material changes. Property, CGT and inheritance tax changes, these can vary. If they want to stop people selling assets ahead of the rule change, they'll make it effective from midnight on budget day. Otherwise, it's usually next April. Benefit in kind or NI rule changes, same again, typically 6th of April 2026, unless the notes say effective immediately. So yes, big reforms are coming, but you don't need to scramble before the 26th. Right now, your focus should be preparation, not reaction. Know your numbers, have your accountant ready to model scenarios once the budget lands. And make sure your business structure, holding company, trading company, SPVs are flexible enough to adapt when the new rules are confirmed. The smart move isn't to guess the budget, it's to be in a position to respond intelligently once it's official. So here's the bottom line. This budget will shake things up, but you don't need to guess, panic, or start making rash moves. You just need solid foundations, reliable information, and a structure that can flex when the rules do. Start with our tax game plan. It's linked below. It shows you how to pay yourself smarter, structure your profit extraction, and claim what's yours legally. And remember, we update every major budget, so it's always accurate and always current. Then, when you're ready to go deeper, join our YouTube membership. That's where we'll break down the new rules in detail, show you the advanced planning moves, and let you vote on the topics you want covered. And if you'd rather have everything handled for you, the structure, the compliance, the reporting, that's what we do at Tax for Pros. We design, implement, and manage the whole system so you can get on with growing your business. Now, only about 14% of who have watched these videos are subscribed. So if you've made it this far, you're clearly serious about keeping more of what you earn. So hit subscribe, download the game plan, join the membership, and let's make sure this budget works for you, not against you. I'm Sarah from Tax for Pros, helping business owners build wealth, not just businesses. See you in the next one.